Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny.
Today we're going to kind of look at the consequences of the Russian invasion on Ukraine and all the wars and invasions in history that have affected the SPY and kind of how you can prepare for that.
Yeah. If you got whipsawed by this week's price action like I did, then you can take a little bit of lesson from these historical events. We also want to take this time to express our condolences to anyone who has friends or family in the region of Ukraine. It's really unfortunate to see such widespread aggression carried out publicly where everyone can be a witness to it too, which is even more tragic because of that many more secondary victims, I suppose. But yeah.
Right. And yeah, it's um, we're not trying to take advantage of any situation whatsoever. It's just we're purely a stock channel, so don't read into it too much. All right, ready? Two stupid guys trade stocks. All right. So obviously, this is not good what's happening. Here's a list of all the things, well, not all of them, but the vast majority of them from 1941. Basically, right here, you have your event, your one day, the bottom or days to bottom after everything started, and the days to recovery. The big thing is what Vinny's camera is blocking, which I'm going to move right now. There we go.
The average.
Yeah, the average. I'm just covering up all the good stuff.
Yeah, exactly. Yeah, that's pretty crazy, huh? 22 days.
22 days till bottom, and then days to recovery 47. We had a hardcore V-shaped recovery, which we are going to look at. But yeah, it is pretty interesting. This was a pretty wild slide to me. 5 out of 5 times stocks bottom just before the invasion. These weren't so much events like the last one, but actual kind of wars. So Vietnam, Iraq, Gulf, Afghanistan, and the Crimean crisis. The gray is 2 months prior to the invasion. When everything's hitting the news, just like when Russia lined up a bunch of troops, and we're all like, "Is he gonna do it? I don't think he is." And then we were wrong.
But he did it.
Yeah, he definitely did it. So yeah, I thought this was very interesting. This was kind of a shocking picture. This is off Bloomberg.
Yeah, pretty crazy. It's definitely one of those kind of buy the rumor, sell the news sort of scenarios. Just once it actually finally happened, the market was able to all right, I guess this is reality, and move forward from there.
Exactly. Yeah. So this is looking at Russia invasion of Ukraine specifically because they did do this in 2014 on certain areas in Ukraine. So basically, the red here is the Russian stock market, I guess, and then the white is the SPY, and blue is Europe. So they invade. They actually invaded. I think it was like 220 with the news and all the stuff, just like this last time, where you have a whole month of it talking about it. So we
Mm.
bottomed, and then the whole rest of the stock market was fine. Russia was not.
Jeez. Well, part of that's going to be the repercussions of sanctions because they take longer to take effect.
Yeah, it's pretty wild. So the consequences of this war specifically, and this is not talking about human lives. This is only talking about fundamentals in stock market. Is global oil price increases, increase in inflation, and supply chain issues. We're gonna take a look at these.
Mm.
In terms of us, 85% of crude oil imports are from Canada, Saudi Arabia, Mexico, Venezuela, Colombia. Depending on what site you look at, they all have different percentages. Canada is always the biggest. And we got 7% from Russia in 2020.
Okay.
So, in terms of oil, I know everyone's worried about the gas prices, all that stuff, but, there's other issues.
Yeah, they were already high. Bring back the Keystone Pipeline.
Yeah, there's already issues affecting that.
Yeah.
In terms of inflation, this chart here, this is terrifying. This is over like the last 20 years of inflation up to 7.5% as of this last month.
Yeah.
Higher than we've ever been. And the problem is in times of war or global crisis, you have more inflammation, and we already had a absolute shit ton of inflammation. I'm sorry, inflation. Sorry, we're in medicine.
It's pretty inflammatory, Dylan, if you don't mind me saying so myself.
Yeah, I think I said inflammation like 3 times. I meant
You did.
inflation. Sorry, guys.
So good.
But yeah, look it up. We've just constantly going up, and this is before this whole tragedy is happening. So what's going to happen after this? You have any ideas?
It's only going to get worse, unfortunately. Like, now you have to a degree when you have these conflicts, the budgets kind of go as like a secondary factor. Like I was literally before we hopped on here reading about how the U.S. is preparing to send hundreds of millions of dollars worth of military equipment to Ukraine. Same thing with the Germans. That's a lot of kind of buying pressure that's get put on that sector. Which is why Lockheed Martin was hitting an all-time high before this whole conflict kicked off. So not surprising. These companies are going to have. I want to say a blank check, but they're going to have a much easier time selling their wares.
Yeah, I don't know why I always look back at events. I'm like, this was common sense. Why didn't I buy this company? Why did I not buy Lockheed Martin in December?
I know,
Like
right?
common sense. Like Dylan, you're an idiot. So supply chain issues. Russia is the largest wheat exporter and a major supplier to Europe. Ukraine's biggest exports are corn, wheat, seed oils, iron ore. This is where you're going to see so a lot of agricultural issues. And then Ukraine accounts for roughly 70% of global neon gas exports. We had a video where we talked about chip companies, AMD, Intel, NVIDIA, Taiwan Semiconductor. They You use neon and lasers for the chip manufacturing process. So chip supply already constricted, and it's probably going to get worse.
Yeah, and you're going to see
Um,
the demand kind of come up as far as more missile systems and other military equipment.
yeah, it's yeah. Oh boy. We're gonna look at here's the cues. Vinny, you're seeing this, right?
I am indeed.
Cool.
It's Yeah, I mean, I honestly, once we pierced that level from that January 24th day, yeah, that little wick right there, I thought this was gonna go nothing but down. And I got like whipsawed because I was in way too much of a bearish position on a couple of high flyers, mainly
Which is
Tesla and
smart.
Square.
I probably I would have been too, to be honest.
Yeah,
Um, so basically, as we went down through this wick, we didn't do it on high volume as you would think. Now, granted, high volume is relative. This is insanely high volume, but when you look at the last 3 weeks, it's not that high. Um, it was the problem is overnight, Russia moved in, we opened here, and then this is the bullish possible. There's really no other bull doji or anything that's more bullish than this. Like at no point did we even like move down and back up. It was just full up on hardcore
yeah,
volume.
it was insane. Allegedly, people were blaming quant funds for that massive reversal. The same folks that they thought did that on January 24th and bought it right up from that wick. I will point out that you are looking at like a 10-point like sequential decline there between low and low. But what that means, I don't know.
Agreed, but the buy up on the low is the scary part because we had this low here, it kept going for a little bit. This was we
Mm.
dipped down, not so much technical analysis, it's more fundamental because of the whole Russian problem. But as it shot back up, we went through this 9 moving average here. Next one's the 20, which is also the support at 350. I
Mm.
believe the SPY, I'll just look real quick, is pretty much the exact same thing.
Yeah, not really that different.
Yeah, it's
But
the
it was
same thing.
also like another 10 points basically down from the low to low.
Yeah. So this is going to be interesting. I personally don't think we're going to hit that low again. It's very uncommon to have that big of a bull bar. It's different. It formed a hammer because that means that at some point bears had taken control. They went back down, and then bulls came back. At no point did bears have control of the day or the next day. It's just
Yeah.
it's a full bull buying moment.
Yeah, that was the thing I was kind of surprised with was on Friday just how much like the continued bullish sentiment. It started bullish. There was like a little bit of a lull like through like the late morning, and then end of the day very very strong. So like honestly, it seems more confirmatory to me that like we're gonna have at least a short term upward trend.
Yeah, I think we're gonna have issues when we hit the 200 moving average on the SPY, which is 445. We are at 437. But
That's
yeah, let us know what you
formidable.
guys think. Obviously, it's not fun to look at these kind of scenarios, but it does help educate yourself as to what happened in the past, what may happen in the future. So, anything else to add,
Exactly.
Vinny?
No, that's pretty much it. That's our best learning tool is to look at the history of what the market has done in similar occurrences.
All right, thanks for watching, guys. I appreciate
$1
it.
million.
You have a good one.
Doctor.